There is a multitude of markets, strategies, and styles for how traders make money. As a whole, traders make money by speculating on the rise and fall of the prices of financial instruments. The various markets traders often speculate on are stocks, options, Forex, crypto, commodities, fixed income, and other derivatives. Traders place buying and selling orders that end up with a profit if their trade thesis is correct, and a loss if it's not. In today's video, we are going to show you becoming a trader to make money. Without further ado, let's begin. The various markets traders can make money in. There are numerous markets where traders can participate with other buyers and sellers to make money. You've probably heard about the stock market, the options market, the Forex market, the crypto market, the futures market, or the commodities market. Each market offers various financial instruments traders can buy and sell to profit from a change in price. We're going to go through these various markets and how a trader makes money in each. Who is a stock trader and how do they make money? Stock traders are individuals or groups that make money off the rise or fall of a company's stock price through buying and selling. The amount of money a stock trader makes is determined by A, the size of their position in shares, and B, the dollar value the stock share prices move in their favor. Buy low, sell high. This is a method through which stock traders aim to buy a stock when it's cheap and sell it off at a higher price in the future. Imagine it's 1998 and you think Amazon could be worth much more than it currently is in a couple of decades. You decide to buy $5,000 worth of Amazon shares at $5 per share, which would be 1,000 shares. 2 decades later, you return to your trade and find that the stock price of Amazon is now over $2,500 per share. You own 1,000 shares of Amazon, and at $2,500 per share, your initial $5,000 investment is worth $2.5 million. You happened to buy Amazon when it was low and had correctly assumed it would gain in price, thus selling it higher. This is one of the simple ways in which you can buy low and sell high. Short selling. Another way to make money through stocks is what we call short selling. This is the opposite of the example above. Here the goal is to sell high and buy back lower. Let's imagine it's 2007 and you're worried about the housing crisis and how it might affect banks who own a lot of the mortgage-backed securities that were so rampantly traded. You found a stock you think is vulnerable to the housing crisis called Bear Stearns. It's currently priced around $120 per share, and you think it can go lower, so you decide to short sell the stock. Now how do you sell a stock you don't own? Technically, you borrow the shares from someone who has them, then sell them, then buy them back later for a lower price, thus pocketing the difference. That is how you short sell a stock. Dividends. One of the unique ways a stock trader makes money is by buying dividend stocks. Dividend stocks are stocks of companies that pay income to their investors quarterly or annually via a dividend, which is a small distribution of cash from the company to the shareholders. This is done as a reward for owning their stock. The dividend a shareholder gets is often a percentage of their investment. Hence, every time a dividend is given by the company at scheduled dates per year, you can either A, get the dividend proceeds put into your account, or B, have those dividends reinvested into more shares, thus increasing the size of your position. Traders who often seek dividends are looking for a passive income, as they don't have to do anything to get the dividend income. Who is a futures trader, and how do they make money? A futures trader trades futures contracts with a broker to buy or sell a financial instrument at an agreed price and time in the future. Imagine you think the price of a commodity may rise in the next 6 months. Futures allow you to get into a contract that mandates you to buy the commodity by December at an agreed price if you don't close it before the future contract date. Your contract is with a broker or a dealer. When December comes, if the commodity increases in price as predicted, you profit. But instead of buying it at the current high price, you can buy it at the lower agreed-upon price. The difference between the current price and the price you purchased it at is your profit. However, if your speculation is wrong and the commodity's price falls below your agreed-upon price, the contract mandates that you buy it in December at that higher price for a loss. Who is an options trader, and how do they make money? Options trading is a form of derivative trading whereby you trade contracts that are called options on an underlying stock, index, or ETF. They are called options because you have the option to convert your option contract into a long or short stock, index, or ETF position or close it for a profit or loss based on how the trade works out. All options are traded on a specific underlying, like a stock or ETF, at a specific strike price on a specific expiration date. Who is a Forex trader and how do they make money? The Forex, or foreign currency exchange market, is another financial market that allows traders to make money by buying and selling currencies against other currencies. If you own US dollars and spend US dollars in the US, the overall value of your US dollar going up or down against other currencies doesn't matter too much to you. But when you travel abroad to another country, the value of your US dollar versus other currencies matters. Who is a crypto trader and how do they make money? Crypto trading is the latest entry into the financial market space. A crypto trader speculates on the price of cryptocurrencies, intending to profit when their speculations are correct. Just like trading Forex, when you trade the value of one cryptocurrency, you are doing so by trading one cryptocurrency's value against another. There are several ways to make money through crypto trading, but the most popular are: can trading make you rich? Trading can make you rich, just like many businesses or professions. However, not everyone will be rich in trading. In fact, the statistics of traders who failed in trading way outnumber those who became successful. Trading takes a lot of time to master, as it requires many skills to develop before you can make money trading. And trading is very risky, so it's important you understand all the risks involved in trading, specifically as it pertains to the markets you are trading. How much do traders make per year? It is hard to tell how much a trader makes per year because there are a lot of factors involved, such as capital or investment amount, trading skill, trading instruments, and so many more. Two traders may buy Amazon stock at the same time in price, but one may buy more shares than the other. Also, one may be using leverage, allowing them to potentially gain more than the other who isn't leverage trading. And for each trader, the losses or gains would be different. By the way, leverage is an extra amount a broker lends you to make trades that your capital would typically be unable to cover, thus increasing your potential profit or loss. Generally, junior traders at major banks are making $200,000 to $300,000 per year in their first few years, but many of the top bank traders are making tens of millions per year. So guys, let me know your thoughts down in the comments section below. Give this video a thumbs up for more interesting content, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.